So first of all, good morning, and thank you for having me around. I guess one of the key themes I'm going to highlight is what Minister Barkat said, which is the resiliency of the economy. This is not to say we don't have our challenges, but when you zoom out on what has transpired over the year and 7 month, year and 8 months, I think by any measure, the Israeli economy has shown so far great resiliency. So let me get going. First of all, how did we enter the 7th of October? Israel, when I talked to other governors, Israel was in many ways a poster child. We contracted the least in COVID, something like 2%. And then we grew over 9% and over 6% in 21 and 23. We're on the way to just under 4 in 23. We had on the right hand side, you see we had very tight labor market. Israel has demonstrated great fiscal responsibility. We've taken our debt to GDP almost from 100 over the years to 60. We've utilized that in that space in COVID. We went up to 72, and within 2 years we were back down to 60. And then inflation, you could see at the bottom right, we're at the bottom of the OECD and on the way to our target, which is between 1 and 3% in Q1 24. So that's what I mean. What governors would say, we were on a super softish landing approach. And then came the 7th of October. So what this graph shows you is our history following military events. In red, you see different military events. And fundamentally, Israel has a very good track record of coming out of those, as you could see in terms of growth rate. But at the very end of it, you see the Swords of Iron, the last war, and you could see the red. That was minus 21% on an annual basis in Q4 23. Just an order of magnitude of an event. But that dynamic and resilient economy that we have, you see Q1 24, we're already back at roughly 17% growth. Then it kind of went to zero, and then ultimately a little obviously more moderate growth, and we ended up with year on year about 1%. So where are we? Just a little bit about the resiliency. On the left-hand side, we've been tracking the economy with high-frequency data. The easiest one is credit cards. And you could see how much there was a drop of 30% right at the get-go. And we were surprised the Israeli economy moved. You could see the spending on the left-hand side is right on trend as we pretty much 2 months into the event. In the middle, you see different forms of employment. The teal numbers are the solid teals are reserves. The dark gray is regular unemployment, and the dotted gray is sort of the way we dealt in COVID with furloughs, government paying furloughs for those who are temporary leave of absence. And so you could see how gradually this thing as unemployment in its various forms went down. You could see the teal coming up when the intensity in Lebanon went back up. That's around September there, but then come down. So all in all, Israel has grown, basically 2% in 2023 because of the war, about 1% in 24. But we estimate that we'll grow. Our current estimate is that we'll grow around 3.5% in 25 and about 4% in 26. This is after taking away about 0.5%, shaving 0.5% due to tariffs. Israel is not exposed directly that much to tariffs. Most of our exports are in the service industry, the high tech. Minister Barkat just mentioned that. We are exposed through global decline in trade, and if there is obviously kind of permanent decline in the stock market, in VC funding, that will come up Israel's way. So you could see that's our expected growth, but nonetheless, you could see in the green line, we're still about 4% away from where we would have been had the war not happened. I'll skip this slide, but basically these are all public, so you can have it in case somebody wants to. But the basic point of the slide, we grew only 2% in the last quarter, even though private consumption was almost double digit. Public consumption was always double digits. Investment was always double digits. So we've seen Israel recover with strong demand. We just couldn't produce it as much because we are missing labor. And that was accompanied at the last line by almost 20% growth in imports. Well, this is a graph that just shows you in orange, for example, we used to have 170,000 Palestinians. We now have close to zero. In the middle, you see the reservists that have been called on. So that is a big chunk of the economy that is missing. And so right now, if I had to characterize the economy, we've seen strong demand, but we have a shortage of labor. So we have kind of excess demand, and that's also a little bit making the pressure on inflation. This is a picture of the housing market in Israel. This is where there's a lot of Palestinian workers. We've saw some entry back into this market, but like the first lesson in economics, most Israelis figured out there aren't as many workers. There's not going to be as much housing. And once that happens, you see on the right-hand side in the dark blue, after prices have gone down, people said there's not going to be as much housing. Prices are going to go up. Enough people think that they go and purchase the houses, and house prices start rolling up, as you could see on the very bottom there. What has happened to Israeli financial markets? At the outset, you could see on the left-hand side Israel's risk premium, which amazingly, before the war, the Israeli CDS was the same as the US. You could see the dots of the red and the blue are the same. Obviously, it spiked up, continued to go up with different geopolitical events. But since the ceasefire in Lebanon, you could see it's kind of dropped very significantly. It went up a little bit in the last month or so. You could see the Israeli stock market on the very right-hand side. It was underperforming, but then once the ceasefire happened, that dark, thick blue sort of caught up with the S&P, and it tells you how important geopolitical events are. I have the supervisors of the Israeli SEC. I'm glad to say we are moving trading from Sunday, Thursday to Monday, Friday, and that will hopefully make Israel even more attractive to international investors once we do that. In terms of our exchange rate, which is very, very important, you could see kind of an interesting phenomena. In blue is the shekel dollar. Until the judicial reform in Israel started, a very simple model just based on NASDAQ. You see the orange line follows the blue line very carefully, but there is a wedge there. Once that happens, why is the orange line so close to the blue line? Because Israel is very dependent on NASDAQ, on VC money, and because of institutional investors abroad. That relationship in green, you see different correlation measures of Israeli exchange rate and the US stock market broke in 23 and 24. And I'm glad, I don't know if glad, but empirically, that has come back to be a high correlation in the last few months. Just a few words as a governor, what had I had to do at the beginning of the war, just to give you a little bit of sense of what we had to do. On October 7th, that awful, dreadful, horrific attack, we didn't know what was happening at nighttime, but we had to decide whether we opened the banks and the stock exchange the next day. I have to decide that. We decided to open. That was the first decision. We knew on Monday when the FX market opens that the shekel is going to appreciate. If there's one lesson we take from all the way to Friedman and Ben Bernanke, you do not want a crisis to become a financial crisis. Therefore, before trading started, we used our ample reserves. We have over $200 billion of reserves. That's over 40% of GDP. And we put out a plan to sell up to $30 billion of reserves, $15 billion of swap lines. We didn't defend a particular peg. I would call it like a QEFX, okay? And that was enough. The main goal was so markets function, and that had huge effect, all right? The shekel did depreciate, but in an orderly fashion, and that made the stock and bond market also function. That was very, very important. In the middle, I'll just say one more word. What do you do with a whole bunch of people who left the area around Gaza with pajamas. They're in a state of shock. A whole bunch of people who went to the front line to defend. What do you do with their consumer loan, with their mortgages? We had all the CEOs of all the banks in my office, and we agreed to defer these mortgage payments for 3 months. That back then we thought 3 months would suffice. They did it. The banks in Israel are very, very well capitalized. They could do that. And they did it for reservists and for those there. And that was very important. It was like a targeted support for those people. We've extended it since then several times. Also, the people who were evacuated in the north. And I'm glad to say pretty much 98% of these people have come back to pay. Governor Barkat mentioned our high tech. This is in one slide. You could see the impact of our locomotive train for our economy. Over 50% of exports, over 1/3 of taxes, very, very important for our economy. In one slide, I want to say, why is it so strong? And why is it so different than 2001 when the dot-com blew and the Intifada merged together to really create a dent in that industry? And we are very different right now than we were in 2001. In 2001, the industry was almost in telecom with companies without a product, mostly dream companies. You could see on the pie chart at the bottom, this is an extremely diversified area. Everybody knows we're so good in cyber, but you could see we have a lot in medtech, in other areas. That orange in the middle includes security tech, which obviously there's a lot of demand for. And on the top northwest point of that pie chart, you see there's a lot of agrotech and solar tech. And as Minister Barkat mentioned, if the Abraham Accord continued, this would be a natural area for us to expand. I always say Israel can grow a really good-looking tomato out of a rock. So we have a lot to contribute over there. What I want to show you on the left-hand side, this is a very important area for us. We monitor it, and we see a resurgence in funding. You could see in the last few quarters, there's on the left-hand side, there's more funding. I'll just say inflation is at 3.3. We'll learn more today. There's a CPI coming out. But the basic premise is this solid demand that we are seeing versus this labor shortage. We hope that comes into balance towards the second half of the year. We're getting closer there, and these are the expectation of forecasters, that we are going to be somewhere below 3% in the second half of the year, and that's where we believe there'll be more possibilities for being accommodative. This is the elephant of the room. How do you finance a war? So Israel has a challenge, and it's sitting on three legs. On the one hand, it's very, very important, and the Bank of Israel is also the economic advisor to the government. And we want to make sure that debt to GDP, even if it rises due to the war, it has a credible path of an inverted U shape of coming down, just like I showed you on other events. On the other hand, our defense expenditures are large, naturally. They're over 5%. They are the highest in the OECD. What you see here is that also we are low on civilian expenditures relative to the OECD. And Israel, like perhaps many of the countries that are here, we need infrastructure investment, roads, metro, education. This is the key to long-term growth. How to balance all these three? That is the challenge. Our debt to GDP is now just edging 68%. I'll just say the war has cost us so far around $250 billion shekels. That's about 13% of GDP. This includes a whole bunch of things that you see in the table. And what you see here right now, the graph on the left, our debt to GDP is going to go up to 69% next year, but then it's supposed to subside in year 26, and we will roughly be between the red line and the yellow line. And if we want to go back to a complete declining debt to GDP, this is, I think, very important. we will have to do more fiscal adjustments than we've done so far. But I would say the government has done fiscal adjustment on the order of 1% in the 2024 budget and in the 2025 budget. This is non-trivial to do during a war, and to project to the markets that we continue to have this responsible fiscal stance. In other words, you could see debt to GDP is not rising in a permanent way, and this is very, very important. I'll just, because of time, I'll just say a few of our long-term challenges. As much as our education system, universities, we have some top researchers, the high tech. Overall, we need to boost up our education. You could see there are some overall exams here. We need public capital to GDP. We're low. I talked about metro. Those things affect the growth rate in the future. The other big thing in Israel, we are a very heterogeneous society. Some of you heard about the ultra-Orthodox participation in the military and participation in the workforce. Right now, two groups are lacking participation in the workforce. It's the ultra-Orthodox and male and female Arabs. You have a graph here that shows you they have low participation, relatively low skill, and yet in orange here, over time, you could see the ultra-Orthodox are going to grow over time. We need to make sure to figure out a way to for them to join the marketplace with skills. Today, there's AI and everything. We need them to get into the market because they have a growing weight in the population. And so this is not an immediate, perhaps, challenge, but it's a challenge that we need to deal with for the economy to continue to grow. I'll just say and close with the key issues. Israel has, as you could see, continues to recover in a moderately, despite the geopolitical developments, and I think it shows a lot of the resiliency that's underlined and the dynamism of the economy. You could see that inflation is sort of coming down, and this is all under the assumption that there is no major escalation. Risk premia has gone down importantly in the last few months. It's still higher than where we were before. We expect growth to be 3.5% to 4%. That's a non-trivial growth. And there are some of these long-term challenges that we will need to deal. Since we've got our friends here from Cyprus and Greece, I would say there's a lot of potential things that can be mutually beneficial. I can think of energy connectivity, tourism synergies, innovation ties, and obviously trade and investment. These are all areas that both the private sector, with the help of the public sector, can be enhanced and be mutually beneficial to all of us. So thank you.
Thank you very much, Governor, for that really excellent overview and presentation. Maybe we can have a photo. We're out of time, but actually you anticipated every single question. I was going to...
I've been doing it so many times,
yes,
and
I
so...
can see.
But if you have one burning question, I can always
Well, my main
answer.
question was about the long-term growth and challenges, and you just covered that.
So all right. Thank you
very much indeed.